I'm here with Blanche Lincoln, who is frankly the woman that everybody on Capitol Hill and probably Wall Street has wanted to hear from for the past 2 days. Your bill that you are dropping today puts much tighter limits on the derivatives market than, say, Senator Dodd's bill. Explain the basic contours.
Well, basically, we take a few steps further. You're exactly right. But the most important thing we do is 100% transparency. We want real-time reporting. We want to make sure that these markets that have been in the dark, that have been a huge part of the cause of our economic crisis, are going to be brought out into the open. That's clearly what we need to see happen. We want to make sure that the information that Wall Street has been able to actually have selectively, that information is open to everybody. We want to make sure that that's, that in that real-time reporting, yes, in fact, we are going to put stipulations on the swaps. We're going to have mandatory clearing, mandatory trading. For those very, very few exceptions, for basically commercial end users, they'll have an option. They'll be able to clear if they choose, and if they don't, then they're going to be subject to obviously higher capital requirements and certainly greater regulation.
So let's say you're JP Morgan Chase. They do a lot of trading in derivatives. They've done a lot of customized products. So if they want to continue in an over-the-counter non-standard product, they would have to spin that business off under your bill.
Yes, more than likely. They're going to have to decide whether they want to be a bank or whether they want to be a risky, take on those riskier practices. The problem is, I talk to a lot of banks, and you look at all across America and middle America, you've got a lot of banks out there that have been doing the right thing. And the fact is, their deposit insurance has gone up drastically to try to cover these risky businesses. If they want to continue to do the risky businesses, nobody's going to preclude them from doing that. But they're going to have to spin them off, and they're going to have to probably meet higher capital requirements and more regulation.
Well, let's talk about this in the contours of the Dodd bill that we've seen. The White House is also pushing its own action on derivatives. Some sense that you moved farther to the left than Senator Dodd's bill, or even the White House wanted you to. What do you say to that?
Well, the fact is, we worked with everybody. I've got a great partner in my ranking member on the Ag Committee, Saxby Chambliss, very thoughtful legislator, somebody we've worked with for a long time. I listened to the chairman over in the House and visited and talked to some of their staff. We worked with Democrats and Republicans. We worked with the administration. We certainly listened to those that were out in the private industry to come up with something. But the fact is, the American people want to see us put our economy back on track. They want to see us be a leader worldwide in responsible financial institutions and responsible financial actions, and I think this bill does that.
We have about 30 seconds left. You know that one of the lines here in Washington is this is because you have a primary challenge at home. What do you say to that?
Absolutely not. I've always been about doing what's right for the people of Arkansas and doing what's right for the American people, and I think if what we are looking to do is to put our economy back on track and get people back to work, we've got to put some kind of certainty to what goes on here in Washington, and I think we have to give people some kind of certainty of what our expectations are out of our financial institutions.